Hey, what's going on, everyone? This is Jimmy with Just the Trading. Today is Sunday, October 2nd, and we're going to go over the weekly watch list for this upcoming week. As always, if you like the content, like, comment, and subscribe by clicking the bell notification down below, and stay tuned for upcoming videos. I'm going to go over some tips and tricks as well as lessons on how to chart and whatnot in the upcoming videos, and just stay tuned. So first, as always, we're going to look at the broader market index at ES futures. So we opened up a few hours ago at 6 p.m. Eastern, and now we are going to go over what we see for this upcoming week. Something from last week that I wanted to share, and I still have this on um, on track, is looking at this 200 weekly simple moving average. So if we look at even from last week, I mentioned that this is going to be a very key level that we need to hold if we want to have any kind of relief bounce. And so if we look at the weekly chart, you can see that we're right on top of the 200 simple moving average on the weekly. And right now we have also a weekly demand zone right here. If you look back at November of 2020, right, we had a few touches. We had a touch with a uh, higher high up here, and then we also had a validation, although it didn't really quite get to that level, it came pretty close. So this is a pretty fresh weekly demand zone that we have. So this is the first time that we're touching it, and it's just so happens to coincide with that simple moving average. So I think it's a really good um, spot to load up on shares. It's a really good opportunity because we are very, very oversold on the daily time frame, right? So I did swing a call into Monday, so we'll see how it turns out Monday morning. But if I go to daily, right, you can see how sold off, how much we are oversold on the RSI, right? We're below 25.95. So risk reward wise, we have, if we want to get back to daily 9, that's all the way at 36.97. Really, our whole numbered psychological level at 3700. We're at 35.71. That's a pretty good move up. So it's a really, really good risk reward. And even if we do um, stay stagnant here overnight, I'll be looking for a call entry to upside come tomorrow. But if we do breach this demand zone, then we'll be looking short to all the way down to 34.51. All right, so that's ES for most part. Let's just take a quick look at the VIX. So where we are on slash VX, we're still breaching this upper trend line, right? We're still above it. So similarly and inversely to SPY, if we do get below this 78.6% fib level of 30.95, we could see a retest of this daily 9. And if this fails, we can even see a even further breakdown of the VIX all the way down to 20.6 level. All right, and so a few tickers that I have in mind that I want to look at for this upcoming week. The first one we have is AMD. So we take a look at the daily chart. I just want to show you that we are in this gap fill area, right? If I zoom in a little bit more, you can see there's a bit of a small gap, and that this is all the way back a couple of years. I think it's a couple of years ago, right? Back in 2020. You see that there's a slight small gap at the from the 64.11 level all the way down to the 62-ish level, and it's a little bit right above the daily demand of 61.62. So if we go back all the way to current day, right here we are. What this shows us is that we are presented with a really good risk reward opportunity that we can get either shares or go long here at the 62, 63, or even more conservatively at 61, 62. So if anything, you can get some time on it, if any, or you can just get the shares, right? So this also presents a really good risk reward. And if we look at the RSI on the daily level, we are very, very oversold as well. So chips have been really killed. If we look at some other tickers like Intel and Nvidia, those have been dying quite a bit as well. So that's AMD. We're gonna see if we can go long here. There's definitely no room, in my opinion, there's no risk reward opportunity for any trades to the downside because we have all this demand down below. So going long is pretty good risk reward. Next one we're going to take a look at some banking. There's two tickers that I have in mind. One is Bank of America over at BAC. I just wanted to show this large trend line here. We're over here at this 29.57 level. We validated it once prior back in July, and now we could validate again at 29.57. Right, we have somewhat of a rejection uh, back at the daily 9, so we could see a further move down. So I would say puts below 30. We don't have that much room down though, 2057. I would probably just keep an eye on this to see once we get down to this level, 2957, I want to see how this level reacts. So if anything, what I can do is actually create an alert right at 2957. So I'll be notified when it actually gets to that level. And then if we take a quick look at uh, Goldman Sachs, I just wanted to show that we're not at a really key level because we actually we sort of are at this right here, 293.60, 83-ish level. We are bear flagging, and you can see with this seller's wicks, excuse me, with the rejection of the daily 9, we are in a bear flag, right? So we could see some further downside all the way down to 284.67 where we have this daily demand. So let me just actually mark this daily demand right there. So we'll see how this acts. I will keep this on the watch list as well. And then next one we're going to look at is NEO. NEO, it's very interesting because both Tesla and NEO had some fundamentals that came out, which is their delivery numbers, and they're actually on track for growth compared to 2021. I believe both Tesla and NEO, Tesla at least, they were looking for a 50% increased growth rate for year over year, and that they would need another 400,000 deliveries for that to be achieved. NEO, on the other hand, which is a much smaller scale, they're at about 83,000 deliveries so far for the year. Last year they hit about 92,000, so only about 9,000 deliveries off. So there is some headwinds or some fundamental news to the upside that we can see. So now that we know some of the fundamentals, let's just take a look at the technicals. We are in the golden pocket area. We have also a demand zone here at 1479 as a daily demand zone. We do have a green candle on the daily from Friday, so we could see a further move up, but we do have a supply zone right here. You can see that there's a drop-based drop supply zone, so there is some resistance up ahead. But this is something that I'll be looking to long, potentially if we get down to that 14.79 level. So let me just mark this real quick as a daily supply. All right. So we are in the confines of this downtrend still. If we do validate this daily demand level, which has not been touched yet, this is a really good scalp opportunity as well if we get down there. All right, next one we have is PayPal. We have been looking at PayPal for a while now because we have been in this kind of like this bull flag for a while. But like many other stocks, we have a drop-based rally with this demand zone approaching right here at 85.75. So similarly, if we can validate and hold this daily demand zone as well as this um, lower trend line, I would say that we can see a little bit of a bounce. At the same time, you can see you might be able to kind of see it's a little bit of a bear flag right here, right? If it's your trend line going up that way as well as at the bottom. So we could break down. It really depends on how price action dictates what price we go to when we get down to 85.75. So that's going to be on my watch list as well. All right, next one we have is Apple. Apple, we have a little bit of a gap apparently um, over here. I'm actually not sure what that was from. If I take a look at a smaller time frame, maybe a 4 hour, right? So it looks like some of this gap has already been um, filled. 1 hour. Yeah, here we can see clearly there was a 1 hour gap down. So right here up at 149.44 down to 146. So there's a potential that we could fill that gap. Usually these kind of gap fills I'm not as interested or believe in as much as if I were to look at the daily time frame and I see a gap on a daily charts. But either way, we did get a gap down. Similarly to all the other stocks so far, we are approaching a demand zone. So you can see with all these stocks approaching demand zones, it provides a lot of confluence with what we see in the futures for SPY, right? The ES, if I go quickly back to it, as long as we hold this daily, my weekly demand zone, as well as this key level of 35.86, which is, coincides with that weekly 200 simple moving average, I think we have some upside in a short-term bounce. So I really don't think that we're going to slice through that simple moving average and act as everyone there, especially with all this recent selling. So that's my play on Apple. And then my last one that I wanted to watch is actually Crowd. Crowd, we are in the context of a bear flag with a rejection of the daily 9 simple moving average. Daily 9 exponential moving average. So you can see this large seller's wick right here. We rejected it and we closed below uh, the daily 9. So any kind of move below, we can see a further downside to maybe even 152.19. So I do have two sets of Fibonacci levels here, and a lot of times I will mark it, but if I point this one out, you can see that we are rejecting 167.86, and then the larger one that we have for this 50%, this comes from, if we take a look at the weekly time frame, you can see I drew this all the way from pandemic lows. So this is our larger Fibonacci retracement levels. So now that we breach a very key level, and we hold below it, that's very bearish, and we can see it go all the way back down to 134. So in the short term, with this small up move, I want to track it and look at the daily again. Right here, right? So we breach maybe even Friday's low. We can see some potential downside, but a real downside move would be if we actually do breach this bear flag and we break 160.89. But we'll see how price action dictates this move and if this bear flag actually plays out. And the reason why this is not as I don't trust this as much is because of this is kind of going against my whole thesis that we might get this short-term bounce on SPY as well as the other equities. So we'll keep a track on this and we'll see what happens. So that's it for the watch list. Nice, short, and sweet. If you guys have any questions, just post it down in the comments below. Again, our Discord, which is completely free, you can join. It's also down in the description below. And until next time, I'll see you guys later.